you, Larry.
8 out of 12 analysts forecast by by Reuters
Yes.
expected the rate cut of somewhere around 100 basis points.
50 to 100.
50 to,
out of 10.
but you expect 200 basis points.
I do.
Why is that?
I'm an outlier on that analyst
Yes.
list. And essentially, I think, we've broken the back of the inflation rate. Last time it was 10.05%. Month-on-month inflation was negative 0.8%. The economy's first quarter was the slowest first quarter we've seen since the first quarter of 2008. And you can recall that in 2008 we're at a complete standstill. I think given that totality of outcomes, I think we've achieved what we wanted to do via this very restrictive monetary policy stance. But I think now the policymakers have got to be worried that the slowdown will run away from them.
Yes.
And they'll be playing catch up again, except in the other way around compared to what they've been doing so far.
Because the thinking among many of these analysts, and I believe some within the MPC, might be that we need to be a bit cautious at this point. Let's not be too expressive with the monetary policy. Well,
I think you've got to calibrate your monetary policy. You can't just move from one extreme to another. I think inflation was nearly at 20%. It's now at 10%. You've got to adjust things for that. I think there's a lot of hot money parked in the money markets, reaping this very, very high interest rate. And maybe the policymakers are worried that those guys will hit the exit button. But, in a world where people are getting paid 0.5% and 1%, we're one of the most generous payers at the moment anywhere I can find. And I think it's about time we brought it a bit lower. So I'm looking for a 200 basis point cut. I heard the comments from the IMF, Dominic Fanitza.
Yes.
He seems keen on holding the rate steady. But and one's got to be cognizant of what the IMF are saying, because they've been very supportive in the last 18 months.
Is the IMF right in this case?
In this case, I think they're wrong.
Really?
Yes.
Because one of the concerns right now, Aly-Khan, is about the shilling, especially against the dollar. It's still a bit volatile, and we're still looking up to Europe.
Well, let me take you back. The shilling is at around 84. It was the best performing currency last year, October 11 through the end of the year. It's held pretty much where it closed out in December. And I think if you look at other currencies, look at the rand's down at least 10%, Brazilian real, Indian rupee, every other emerging market currency you can see has fallen. The shilling has outperformed all of its peers.
Yes.
The consequence of a strong shilling versus the dollar policies is a shilling which is far too strong against the euro. That euro shilling cross is beginning to worry me, because
you mean the euro is worrying you more than the dollar?
I think yes. By holding the shilling here with this very high interest rate, we're creating a very strong shilling versus a euro. The euro has been falling, as you know, and I think it's going to fall a lot further. We export a lot into Europe. All our fresh vegetables, flowers are all priced into Europe, and I'm worried that I'm seeing the slowdown now really start to gain traction.
Yes.
And I've seen this happen before. Just like inflation ran away from us last year to the upside, things could run away from us to the downside. And I think, therefore, on the balance of risks, given what we've seen, I think they've got to start cutting. I expect massive easing through the end of the year, something like about 500-600 basis points. The question is when they start.
Yes.
Yeah.
Because you're talking about that inflation you mentioned has been dropping. We're about 10.05%.
Yes.
Still below the 9% where the CBK wants it, but not where we were.
No, I mean, we were just below 20%.
Yes.
The CBK is talking about a 9% inflation targeting. We're going to go through 9% like a hot knife through butter within 8 weeks. Right? That's a given. Where the oil price has gone, that's been very helpful. This battle between Saudi Arabia and Iran, and Saudi has flooded the oil markets with lots of spot fuel in order to put pressure on Iran. We've caught a break there. And I think given all those things, when you take them in the mix, we don't want the economy to slow down much further. First quarter was the same as Q1 2008. Larry, Q1 2008, the economy was at a standstill.
We just had a very troublesome election then.
That's right. And there was nothing going on January, February, March. You remember the country was at a standstill. We're that slow.
Yes.
So already the economy is showing signs of stress. It's slowing down. And this sort of thing, then to stoke it up again becomes another very difficult operation. I think they're better off taking out some insurance policy, cutting rates by 2%, and basically recalibrating.
Our economy grew 3.5% in the first quarter. You're talking about that. Yet the central bank, rather the finance minister at his budget said he's looking somewhere around 5.2%. So we're a long way off.
Well, the finance minister had some very optimistic projections in that budget. He thought revenue, he was going to capture 20% more revenue year on year.
Yes.
The economy is at a standstill. We've got interest rates which are through the roof. I mean, that looks to me to be very rose-tinted spectacles that he's got on. And I think, he's going to be whistling for that revenue increase unless he gets the Monetary Policy Committee to now start to act, try and protect growth.
Because at least on the Nairobi Securities Exchange side, we hit a 12-month high a few days ago, so it's not all doom and gloom.
No, the stock market has been rallying, third best in the world. First is Egypt, second is Venezuela, we're third. We're up about 18.9% or thereabouts so far this year. It's been a very, very solid rally. I think we're going to get a further rally of about another 400, 500 points through the year end. I'm bullish about the stock market. I think a lot of people parked in the bond market are also going to have to switch into equities. And I think on balance, the equity market looks very robust to me, in part because I think we've tipped over the radar, the news coming out of Tullow, the news coming out of the mining sector.
Yes.
There's a lot of excitement around. I'm noticing people who before, were inquiring and checking, should I open an office? They're seeing me 4 weeks later, they've opened an office. And that is the fastest moves I've seen in 47 years. So I'm bullish about that, and I'm very constructive about the stock market.
Excellent. So let's say at 4 p.m. today, the MPC decision comes out and they've decided we're keeping the rates.
Yes.
Then what? What is the likely impact?
Well, I think they're just, I think the shilling will remain firm. The shilling will rally through 84 again. But I don't think we're going to see much more than that. But I think there's real pain in the economy. That's 18%. Borrowing rates are 23%. There is a real slowdown in what I would call borrowing for investment.
Yes.
And that pipeline demand needs now to be unlocked a little bit.
All right, we'll leave it there. Aly-Khan Satchu, we hope you're right this time. 200
I hope so.
Podcast.
I'm an outlier.
Excellent. Always great speaking with Aly-Khan Satchu.
Thank you.